Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 23rd, 2018, and there's a lot of markets I could be looking at today because we did very well in soybeans and a couple of the other grains, but I want to take a look at coffee here with the ETF being JO. And part of the reason is that all of the trends are pointing to the downside, but we have a nice little technical rating which is basically flat, and that's usually a pretty indication that we're starting to see some trade potential in that particular market. The second thing that we're looking at here is on a daily bar basis, the wave low that triggered, and that is typically a good sign as well for the bulls. You can see some others that have just recently triggered as well, so do keep tabs on the markets that do have these wave lows, because that's a pretty strong indicator that something is taking place. Now if we take a look at some of the patterns on a daily bar basis, nothing is showing up here for coffee as of yet, but we have been seeing things show up here in coffee on the weekly bars. We had a profit taking 2 weeks ago, and we had a dazed reversal indicator, which is a little bit early, but that recently triggered as well. So if we take a look at the actual market itself, these are daily bars for coffee. You can see the trend to the downside. I'll emphasize that a little bit more with one of our UVI charts. But here's this wave low that is triggered. You can see that the market is a little bit on the high side when it comes to its volatility. You can see that there's been a fair amount of volatility. The market was up. It did retrace a little bit here today, but we are looking at a basing, and this is what I'm really going to be harping on. It is low, meaning that it's not super strong, but I was very concerned about this threshold right through here. Let me see if I can pull up the actual number, 108.75. This was truly concerning me that we were dipping below that, and then we did close back above it on a closing bar basis for a couple of days here in a row. So it's this threshold here that you really want to be watching. Now, the systems did liquidate themselves today. In fact, I'll show you one of the systems that triggered here, where it actually went long the market and was able to take advantage of this basing formation I was talking about. These are 60-minute bars, so this kind of zooming in on the capabilities of the market having come down, based, and has really been able to stay in and around that 108 level. Now if we can just simply get the market to continue to surge to the upside, I'm sure we'll have other intraday systems and longer term systems that will actually trigger. As of right now, let's see if I can pull this up. As of right now, the systems are completely flat. We liquidated that long, as I just showed. There was a couple others that liquidated as well. Did fairly well in coffee over the last couple of trading days, last in a week or so, and I think that this bodes well for the market starting to base at that 108.75 or 108 at least level, and start to see this market really start to have the opportunity to move higher. And I say opportunity because we've been in a downtrend for quite some time. This is our UVI, Underwater Volume Index chart, and this is going back 3 years in time. So you can see that we have had, since the 16, we've been in a bear trend, up and then down, up and new lows. We're now at a 3-year low, which just triggered recently, down 43, call it 44%. Current is 43.4, so we're in that low level. It's in this dramatic bear trend, and I think we're getting close to the market starting to base here and start to head higher. And so that's really what I want to be looking at. Now, this is obviously a longer term chart, this going back 3 years time. On a shorter term time frame, I just want to show this to you. If we look at resistance gaps, you can see that here's coffee. It's got a 2.3% resistance gap. and I'll show you what that represents. But anytime you're looking for markets that have the opportunities to make some good moves on a short-term basis, these are looking at daily bars and looking at a number of support and resistance levels. But to clarify this, if we actually pull up coffee here, and come down, here's today's close. There's a gap to the downside and there's a gap to the upside. We're kind of in no man's land according to traditional support and resistance levels based upon our signal levels. So it bodes well for an opportunity for the market theoretically to cut through this and get back up to the 115 level. If we don't hold, then that 108.75 to 107 and level that we're looking at here, that the market could actually sell off again. I'd like to really see, now that we're flat, yes, I know that the system's just liquidated some long positions, but I think that we're going to find some of that basing, and if we're able to get any type of a thrust here, then the good news would be this: it goes up to the 115 level, and then we have another smaller but still another gap here up to the 117.81 level. Just call it 118 level. And then we're going to start to see a little bit of resistance, because this one is a little bit stronger. You see the S and then the C. That's strength and that's count. The 115 is only at 39 and there's only one count at that particular level. I'm just going to round it, the 118 level has strength of 112, stronger obviously, and it has a count of 3, where in this particular case we're looking at daily, weekly, and intraday support and resistance levels and coming up with potential targets for the market. And the point being that whenever you have these gaps, either to the upside or to the downside, there's nothing in and around it, then that means that it theoretically should be able to cut through it. If there's any type of momentum surge to the upside, it should make that level of 115 relatively easy. If we don't have a follow through, and I realize we just liquidated some of our long positions, if the market is able to really pick up any momentum to the downside, then that 108.75 to the 107 level, those are the levels that you're going to be concerned with, and we really want it to stay above some of those levels. Otherwise, we could be seeing, when it comes to this this chart here with the 3-year lows, that could even go lower. And again, we're at the 44% level, from the highs that were set. That's a pretty dramatic sell-off, and it's probably due for an opportunity to start to move higher. And what I'll conclude here is with this grading of the markets. Here's coffee, and so we grade all of the different markets. I'll do a whole webinar on how we actually do this grading, but for right now, just realize that it's one of the better markets to trade. It's far better than cotton. Sugar is good, it's a B, but cocoa and coffee, here's coffee right here, is actually a really good market to trade, and it's something that if you have the opportunity to start looking at the futures, do so. It's a volatile market. It's not the type of market that is going to be nice and trending. This is going to be a volatile market, this being coffee, but it is something that you probably should look at. And if you don't trade the future side, you might want to look at that ETF JO, and there's other ones, Cafe, and there's a couple other ones I believe that are out there. But look at some of those ETFs, and I think that over a longer period of time, that this level that we're at right here, this 3-year low, eventually, obviously, we're going to start to head higher. And I think that for the most part, we've seen the majority of the damage, and we're probably due for eventually here a bit of a sell-off or a bit of a surge to the market. So whether it's longer term or it's the shorter term with those gaps that I was referring to, this is something that this is certainly a market that you want to be looking at here. So with that, we will take a look at another market tomorrow. So thanks for watching.